Hey everyone, hope you're having a great weekend. I'm gonna get this weekly market prep going, like we try to do every week. And from this week forward, as I mentioned earlier, I'm gonna be a lot more diligent about this because I'm expanding it pretty dramatically. We've rebranded twice in this week. I put a temporary one in just to make this look a little cleaner, and then I've come up with a final name. This is it. It is Rudy Arias Capital Markets Research. And so, if you're confused by the rebranding, then now you have it. So we're gonna get used to it. This is permanent. So anyway, a couple things. Um, as I mentioned in the article this week, we're gonna keep things free for now. One thought I've had is that everyone who's a current subscriber, there's I believe 55 of you, um, will forever be free. Full access to content. I told you I'm expanding the offerings here. I'm going to do daily um, posts with levels like brought in for the day, and also we have a podcast now. This will be posted to Apple Podcasts and also to Spotify, so you'll be able to listen to it there. That will always be free. I'll only do the weekend in audio and video form, and then I might do a quick one sometime. But anyway, one thought I've had as I was getting to there is that once I get we'll call you guys the first 100. And once we get over 100 subscribers, I'll start, anyone beyond that 100 will, there will be a subscription just for the daily feed. This will always be free, the weekly one. And of course, to you guys, it doesn't matter because everything will be fully free to you forever. Like I said, I'm going to call you the first 100. So I thank you guys for your patience with me and being with me, as some of you have been with me for a long time now. And I really appreciate you, and that's how I'm going to show it. You early adopters or early subscribers get to get the full content forever for free. So anyway, getting ready for this week. We obviously have a holiday week, and that should put a lid on things to some extent, although we did have some an interesting announcement just, I guess, today or yesterday. So we have a little more certainty about our new Treasury Secretary. That's been an area of sort of apprehension, I think, for the Treasury markets for sure. But now we know it'll be Scott Bessent. Hope I pronounced that right, Bessent. So we know that's going to be our guy, assuming he's confirmed. And so that gives a little bit more certainty in the markets. I'm not sure how the market will react to it. It's not up to me. I'm a reactor. So at the open tonight, let's see how it plays. But for now, I can only go with the information I have in front of me. So I've built out levels for you guys like I do all the time, and we'll get right into those. But as always, we'll start with the economic calendar. So we had that. Tomorrow, Monday, all we have is the Chicago Fed National Activity Index and Dallas Fed. Tuesday, pretty light as well. New home sales, a couple things. These are sorted by 2 stars. And then we have the FOMC minutes at 1 o'clock. And going into Wednesday, you got core PCE, price index, GDP, personal income, personal spending. Those are all your big ones. They're noted in red. And you got claims, as always. Those are coming in a day early due to the holiday. And so we got a pretty jam-packed Wednesday all the way into Chicago PMI. And then we have our holiday, Thanksgiving. And then coming back from that, not much. So it's I believe a shortened day on Friday in markets. I think equity markets close early at 1 o'clock Eastern. Could be, I should have double checked that, but I'm pretty sure that's right. I have the bond calendar, I believe, is also, or the bond market is also an abbreviated day. So I expect quiet. Any move we get probably happens early in the week around this data. Obviously a quiet Thursday, but at the same time, and let's get into auctions so I can have this in front of you while I'm talking about it. Bear with me. So we do have some supply this week. So we got a 2-year note auction, and then that's on Tuesday or on Monday, and then on Tuesday we got a 5-year note, and then the last of it is for the month is the 7-year note auction here on Wednesday. A friend of mine, a good friend of mine that I work with in Discord, talks a lot about this final auction of every month. Sometimes, your high percentage of times we bring in some inflows to the long end of the curve as money managers rebalance. Now, given the holiday week here, I'm not sure how that'll play out. Maybe it comes in early. I'm not sure. Obviously, we're not here to predict. We're here to react. But something to keep in the back of your mind. I did read an article from another Substack, the Bond Beat, which is a great Substack. If you are into bonds, this guy is top notch, and he had posted an article from another firm saying that money managers are a bit underweight duration going into end of month. So that also could show up in our charts from last week. I'll show you in a minute, but we could see some flows that are sort of against the trend, which is down, and that would be interesting. We kind of need it. The bond market's been incredibly boring lately. So anyway, to cap that off, we go back. We got a 7-year note auction on Wednesday. It's the last big thing of the week, along with that data that comes out. All right, well, let's take a quick look at the SOFR curve. Again, I'm not a STIR expert, but I do like to point it out and take a look at it from time to time. I haven't tracked it very carefully, but it looks like nothing's changed really since the last time we talked about on this. Although we did push out this cutting cycle all the way into 2029. At least this is what this is showing. I think the last time we looked at it, it was sometime in 2028 before it rolled. So you got rates being cut pretty sharply in 2025, with the low point somewhere around 3.8 here, 3.75, whatever we want to call it, just to give it a nice round number, in 2028, 2029, before things turn the other direction. So always good to monitor the shape of this as we go. Let's go take a look at some of the other spots in the yield curve. Let me make this prettier. Again, I don't pay for TradingView, so you're going to get ads. Sorry. What we're looking at right here is 10s over 3 month. I think I've pointed out a couple times recently that this is something I'm watching pretty closely. We have gotten really close to that zero line for the first time since November of 2022. So it's actually gone above it and then flattened a little bit back below it. So seems like it's sort of paused here. This is a key metric in my eyes, as far as, although it really hasn't played out the way it normally does. Normally when you see this inverted the way it was, you see banks sort of slow down their lending. That didn't happen this time, so really didn't make much of a difference to say equity investors, but it's been important. It's always important to us on the bond side. I'll take a quick look at the 10s and 2s. You see this flatten last week, headed back for that zero line, slightly positive. We've got a dotted line drawn for the zero line on that one. And the last thing we'll look at as far as curves go is I always like to look at this 2, 5, 10 fly. I'm going to give it a broader picture here. So it's pulling back, or sort of flattening back into these spike bases, if you will. So that'll be interesting to watch as well. It got pretty close to the zero line along the way, but we had that breakout. We talked about that back in October. We had that breakout of that sort of range it played in for so long, and now we're well above it and flattening back toward sort of some support here, if you will. So interesting stuff there. I'm going to add a couple new wrinkles this week. Like I said, I'm trying to be more. Oops, got to change this. Sorry, guys. Sorry, this is very. There we go. Okay, excuse me. I forgot to change that before the video. So sorry, we were just looking at the SOFR curve again. Anyway, what I have here, and it's kind of hard to see, especially if you're watching on a phone or something, but I have every wrinkle of the curve here, every futures contract on the curve here from ZT all the way to UB in the bottom right, top left for ZT, bottom right UB. So you go 2s, 5s, classic 10s, ultra 10s, classic 30, ultra 30. I watched this during the week. Like this screen right here, is this template is pulled up on my screen at all times. Now I usually have it zoomed into a more intraday. I've got every chart here pulled to 30 minutes, 30-minute candles I mean, but usually I have it pulled into my day trading sort of aggregations. But this gives you a good picture of, like, you know, where the sentiment is and how the curve's shaping up. So as you can see, if you look at these charts, they're all 30-minute charts. So, and it's all pulled into last week. So what you've seen here is relative strength on the long end, and you know, this weakness here, especially in the 2s and 5s. And the further you go down, the better the chart looks. This looks terrible. This looks terrible. This doesn't. This looks like rising, like sort of like a wedge, or like a, what do they call it, a flag, where you have these you know, lower highs and higher lows sort of building to a pressure point and coiling up for a big move. It's even more pronounced the farther in you go. So we're definitely setting up for a move. I don't know that it happens this week with the holiday, but it very well could, just because things are very compressed right now. We had very little in terms of, like, you know, volatility last week, and so this is likely to squeeze out one way or the other, whether it goes, and you can also see these bands are starting to pinch here, which just implies that there's less volatility actually. But you know, when it does break, whichever direction it goes, it's probably going to be a pretty sharp move. Now, as I mentioned before, as I talk about, you know, end of month flows and things like that, my feeling is that this move breaks to the upside. There's a lot of leverage on top of this. A lot of people position short, and perhaps they want to take a break into end of month, take their profits, book that, move in. So that's just sort of my theory. But again, you got to react. You can't have that going in, because otherwise that's how you lose money. If you have this built in your mind that this thing's going to pop right now, and it's going to squeeze all week, it's a good way to lose money, because it could very well go the other way. Maybe the market doesn't like the new Treasury Secretary that's coming. I don't know. So anyway, this is a good thing. I recommend that you build something out similar, where you can look at all of these in conjunction at the same time to see where you know, the flows are. Anyway, let's go ahead and get into what we're used to now. As I mentioned in my article the other day, I am adding, just so I can be more comprehensive, I am adding ZT and ZN to the mix. So we're going to track everything from now on, not just, before I was doing the 5s, the ultra 10s, the classic 30s, and the ultra 30s.
Power off.
Sorry about her. That's my Bluetooth speaker. Decided to turn herself off. All right. So another thing that I've done here is I've tried to bring in the yield the best I can. So those are going to be estimates, right? I can't be perfect with that, but it's a ballpark. So if you look really closely here, you can see that I put the yield in with the pivot point. So for this week, the 2s, I want to see them, before you get excited about any sort of rally, I want to see them push above this 102.193 area, which is about 4.32%. And if you can do that, you're you're looking here. This is pretty tight. As I mentioned, I'm not expecting a ton of volatility. But you're looking at 102.21.5 on up to 102.24, which is 102 and 3/4, and then into 102.26. Now you can see these yields, the corresponding yields on the right side here, if you're zoomed in. I'll put screenshots underneath, as I always do, so you guys will be able to see it and mark it on your charts if you like. So your support levels, we're trading below, obviously, the first support, which is going to be 102.17.5. That puts you at about 4.365%. And currently we're trading on the second support about 4.38, which is 102.5, or 102.16 for those of you who are uninitiated. Below there, you got a pretty good little chasm on down to, that's a 3 full ticks down to 102.13 or 4.5%. You'll notice that that's pretty similar across the board here. That I have this area in here pretty tight, right? These levels are pretty close together, but once you get above and you get through, things will open up. If it does manage to, which again I don't expect, but if it does manage to get above this, I'll have to come back in, midweek and add some levels. Again, on the twos, I haven't tracked it very well over the years, so I don't have as good of a feel for it as I do the 5s, 10s, and 30s. But these have been pretty solid levels so far. Okay, let's move on to the 5s. Okay, these are the same levels that I used for our daily plan the other day. I want to see this thing trade above 106.24 before I get excited. And that leaves you there to 106.28, somewhere in there. Yeah, 106.28, and up to 107 even. That has been a really sticky level. In fact, back here, if you look, it tried to get there Tuesday with the Ukraine-Russia stuff, and it failed miserably before it even touched the level, which is interesting. And then above there, you got that 107.04. Now your supports this week are going to be 106.19. This level has been so sticky. You can see that we just pretty much hugged it the entire week, and that is a really strong level. It's been good for us in the past. We've used it, for almost 2 years now. So 106.19, very important. And you got 106.5 right below it, about 4.325%. We're trading right there to start the day, probably, unless we get a gap. And then 106.12 below. So that's that for the 5s. Let's move on to ZN. So the classic 10s. First time, I think we might have covered it for a little bit a while back, but first time in recent memory that we've looked at this product. I've actually been trading it a little bit, even though I've told you many times that I hate this product, but lately it's actually been pretty clean. So that's what I look for, is sort of clean moves in products that I trade. Where my levels can be trusted, and this has been giving really easy reads, even though this has been extremely, whatever the opposite of volatile is lately. The last few days were just mind-numbing. I basically just didn't trade. But anyway, your pivot on that one, same as it was the other day. All these levels were from the other day as well. This 109.24. I want to see it trade above there firmly before I get excited about a rally. And that takes you all the way to 110. And then on to 110.06. And then you got a pretty sharp move all the way up to 110.5. Above there, it's not showing on this chart, and I don't want to obscure anything, so I'm not going to zoom out and show it. But the 110.24 level is massive. So if you don't already have that marked, mark it. It's above there, but I don't think we're gonna have enough juice to get that sort of move this week with as low as volatility's been. Anyway, your first support, you can see it worked pretty well this week, was 109.5, 109.16, and then on to 109.08. This thing moves pretty smoothly to the options strikes. Actually, that's why it seems pretty lame that I'm using these round numbers like 109, 109.08, 109.16. But if you go look at an options chain, on this you'll see that, you know, it's every quarter point you've got pretty heavy concentration or whatever, and you see that the price tends to just gravitate toward those levels. One reason I don't like this product actually, because, you know, but if you use that to your advantage, it's a good thing. But you can see we're probably pinned in here this week. These are two big options levels for last week, and you see what they did into Friday's expiration. It just would not get above here, and anyway. So again, pivot 109.24, S1 109.16, S2 109.08, and then on down to 109. I didn't bother putting in this low, but you can also watch that. I don't know if you've been trading these things long enough, you know that if we head down toward that low, you usually will see it sweep below, like actually go below before, and then maybe pick back up and work its way through. So anyway, good. Let's move on to the Ultra 10s. TN. And where are we? Yeah, get my screen pulled up. There we go. All right. So similar picture here. These charts look exactly the same. They're supposed to. But, you know, just this is for if you are trading any one of these individual instruments, you know, that you have your specific price levels. That's why I go through them individually, despite the fact it seems redundant. You could almost just superimpose things on top of one another. But anyway, so our pivot on the 10s, on the Ultra 10s for this week is going to be 112.24. You get above there, you're going to look at 113.03, and you can probably be on that round number of 113. I just had that 113.03 specifically marked for a reason. And then on up to 113.14. And then our third resistance is going to be 113.26. So those are your resistance levels if we can manage to trade above here. Until it's above here, though, it's still, you know, you've still got this sort of bearish momentum that you can't really see in this chart, but if I were to zoom out, let's do that. There you go. There's your bearish momentum. Anyway, let me zoom back in. And, okay, we have everything in view. So our supports, our first support's going to be this 112.11. It served us pretty well last week. You can see these two lows here, barely got past them. So 112.11. Second support, if we break down, 112, which you can see was sort of the base of this candle. And then on down to 111.24. So those are your three supports. So again, your pivot, 112.24, down to 112.11, 112, 111.24. Okay. Again, all this stuff's going to be pasted below, so you'll be able to mark them yourself. Let's move on to the classic 30s. All right. Pivot here, 116.24. On up to, that opens 117.08. Get above there, you got a pretty sharp move pretty quickly up to 118, which is your 4.5% line. Been very strong. That's a ballpark 4.5% there at 118. 118 is a huge level on this product. So, you know, any rally is going to probably at least pause there. Doesn't matter unless it's some sort of crazy geopolitical thing. That level should be sticky as hell. Now, if you do get above it, you've got this 118.20 right above that's also pretty strong. So again, your pivot, 116.24. Let's get below there. You can see this support held up pretty well, served us well last week. This is 116.03. You could call it 116 even if you wanted to, because this is also heavily influenced by the options. Your next support is going to be 115.19 on down to 115.08, which would basically be last week's low. So we break below there, I'll have to get in some more levels. I have them in my master chart, but anyway, I just like to keep things clean for you guys. All right, let's move on to the Ultra 30s. All these savages trading the Ultra 30s. So UB, let me go. I forgot to click here. Okay, we've got a really familiar level up here for R2. I'm going to zoom out a little bit. There we go. All right, so our pivot is going to be this 123.03 or 123.04, sorry, which is about 4.575%. You can see that it kind of capped it this week. It just could not break above. Support, well, I'm going to go through the resistance. If we get above that, you got that 124 even, pretty strong level. It was actually the high of the week. And then guess what? Good old friend, 125.22 to 126.02. That was our. You've probably seen this picture many times this year. We keep coming back to that level, so that's going to be like similar to that 118 and ZB. It is a magnet. So if we do break above, that's where it's going to gravitate toward. And I don't know if that's the right word for that, but who cares? Anyway, it's going to move toward that level, and it'll probably at least pause there. But if it does get above it, you've got 127 above. 127 even, it's about 4.4%. Your supports for this week, they're kind of tight. You can see that. You can see my expectations in this chart that if we do go higher, you're going to have a pretty sharp move on the long end. If we break lower, I think we'll still struggle. I think we'll stay inside of this, and that's where like the lack of volatility will show itself, and that I don't know that we're going to have enough behind us to get a breakdown this week of these levels. That's why you see these are sort of tightly packed compared to these resistance levels. So you got the volatility. I guess let me summarize that with the volatility would be upside volatility this week if we get any. So your first support though is going to be this 122.04, held up pretty well, and below there 121.20. And below there, last week's low basically at 121. All right, let's get a look at the equities. All right, I feel like these are getting better for me. I just started tracking them, I think, over the summer. I mean, I've always tracked them for myself, but I just started posting them here over the summer. But and I have narrowed it down. I'm going to stick with just ES because it is the king. Levels have been pretty good for us. So they're a little bit different here, and I've gathered a couple levels from a good friend of mine who trades this product, Chris. He was on Spaces with me on Friday night. If you don't already follow him, go follow him. Anyway, this is his level, so I'm going to credit him with this one. Although his exact measurement is 59.42, I'm going to go with 59.40. So that's going to be my pivot. So you buy above, sell below. So that's your pivot point, 59.40. We're trading pretty well above it, 51 points above it. Which are, first resistance area we're trading slightly above is this 59.85. It's a huge level. This has been with us for a while. It's a very sticky level. We struggled to get above it. We ended up closing above it on Friday, but I would imagine there might be some consolidation here. Now, we could also do the old holiday maneuver and just ramp higher. That happens often during holiday weeks, where it just opens up and just keeps going. If so, your next resistance is 60.25. The all-time high is slightly above that. I just like that. So it's 60.53.25 is your actual all-time high. But I feel like if that 60.25 is hit, we're probably headed toward your next resistance of 60.67. Somewhere in there, 60.75 could be the number. But anyway, I believe if that 60.25 is broken clean, I would say that we're probably going to go ahead and clear out that all-time high. Now, something to remember is that all-time high was set pre-market. It wasn't set during a cash session or TH. Those tend to get cleaned up. They tend to get seen again, and usually in a very short period of time. So if we do get that holiday drift up, go ahead and expect that to happen. So above 60.25, you're looking at a new high. At 60.67, somewhere in there. If we break above there, I'll have to come in and recalculate. I got nothing. You can basically just look at SPY, which is what I would do there. If you look at SPY, you can figure out sort of round numbers on that, extrapolate that toward ES and SPX, or SPX is the king actually. So these are all derivatives, but look at where there might be like a major sort of round number, and you can use that and extrapolate that onto ES and figure out a level that way. But I'll be sure to update you if we do break above there. So your supports, though, if you do lose that 59.40 area, your first level down is 59.08. That's also one of Chris's levels. I'll give that to him. Again, credit to my boy. And then below there, I have this 58.80. I don't know if you remember, I had it at 58.85 for the longest time. I tend to use those numbers, the 85 and 15s. I moved it down to 59.80 just because you've got this. Now you've got a bar that touched that 59.80 right there, which pretty much that and this one were your two big buys for the week. So 58.80 is their second support down to the sweep of last week's low, which would put you at about 58.45. So that's that. Again, we'll go over those pivots again. You're going to, above 59.40, you're a buyer. Resistance here, 59.85, 60.25, 60.67-ish. 59.08 below, down to 58.80 and 58.45. All right. Well, that pretty much wraps it up. As always, this went a little longer because I did cover a lot more stuff, but I do want to wish you guys a happy Thanksgiving. I brought in a cheesy turkey picture here to do so. Enjoy it with your family. Don't obsess over markets because, family's more important, obviously. So hope you guys enjoy it. Be thankful, and I'm thankful for you guys. Appreciate you. Bye.